Welcome to the world of Bitcoin ETFs, where digital currency meets traditional finance. As we navigate this ever-evolving financial landscape, Bitcoin ETFs have emerged as a game-changer, marrying the innovation of cryptocurrency with the stability of tried-and-true investment strategies. So what exactly is a Bitcoin ETF? Well, it's a type of exchange-traded fund that tracks the value of Bitcoin, allowing investors to gain exposure to this digital asset without needing to own it directly. This means you don't have to worry about the technical complexities of storing and securing digital currency. Instead, you can buy and sell Bitcoin ETF shares just like you would with shares of any other publicly traded company. Bitcoin ETFs have revolutionized the investment landscape in several ways. Firstly, they provide a more accessible entry point for individuals and institutions alike to invest in Bitcoin. Secondly, they offer increased liquidity and transparency, as they are traded on traditional exchanges. And thirdly, they mitigate the risks associated with the direct handling of Bitcoin, such as hacking or loss of private keys. In this video, we'll be focusing on the top 3 Bitcoin ETFs that have caught the attention of investors worldwide: iBIT, BKCH, and GBTC. Each of these ETFs has its unique attributes, performance metrics, and expense ratios, and we'll be diving deep into these aspects to give you a comprehensive understanding of what each ETF brings to the table. Whether you're a seasoned investor or just starting your journey in the world of cryptocurrency investment, knowledge is your most valuable asset. By understanding these Bitcoin ETFs, you can make more informed decisions and potentially maximize your investment returns. So buckle up and get ready for an enlightening journey into the world of Bitcoin ETFs. Stay tuned as we dive into the specifics of these ETFs and help you make an informed investment decision. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. First on our list is iBIT, a leading player in the Bitcoin ETF arena. Distinguished for its innovative approach to investment, iBIT is a game-changer in the world of Bitcoin exchange-traded funds. This unique fund presents a seamless blend of digital cryptocurrency and traditional investing principles, making it a compelling choice for many. At its core, iBIT operates much like any other ETF. It tracks an index, in this case, Bitcoin, and allows investors to buy shares that represent a portion of that index. This structure provides investors with an opportunity to gain exposure to Bitcoin without the need to directly own or manage the cryptocurrency. One of the key features that sets iBIT apart is its commitment to security. To ensure the safety of investors' assets, it uses advanced encryption technology and a multi-signature transaction process. This means that multiple parties must sign off on a transaction before it can be completed, adding an extra layer of protection against potential threats. But what truly makes iBIT stand out is its low expense ratio. An expense ratio is the annual fee that all funds charge their shareholders. In the case of iBIT, this ratio is impressively low, which means more of your investment goes towards generating returns rather than being eaten up by fees. In addition to its competitive expense ratio, iBIT also offers high liquidity. This means that investors have the flexibility to buy or sell shares at any time throughout the trading day, just like they would with a regular stock. This high level of liquidity makes iBIT an attractive option for investors who value flexibility and the ability to make quick investment decisions. Moreover, with iBIT, investors can enjoy the benefits of diversification. While the fund primarily focuses on Bitcoin, it also holds a small percentage of other cryptocurrencies, providing a balanced and diversified portfolio. In a nutshell, iBIT offers a unique blend of digital and traditional investing. Its low expense ratio, high liquidity, and focus on security make it a compelling choice for those looking to gain exposure to Bitcoin in a secure and cost-effective manner. iBIT offers a unique blend of digital and traditional investing, making it a compelling choice for many. Next up is BKCH, another powerhouse in the Bitcoin ETF market. BKCH is a remarkable player in the world of Bitcoin ETFs. This fund is managed by BlockFi, a renowned name in the digital asset management space. BKCH is not just an ETF that passively tracks Bitcoin, but it also provides investors with the opportunity to gain exposure to the fast-paced world of digital assets, without the need to directly own or manage them. One of the core strengths of BKCH lies in its operational efficiency. The fund's management has a deep understanding of the digital asset market, which allows it to effectively navigate the complex world of cryptocurrencies. This operational prowess is reflected in the fund's performance, which has consistently outpaced many of its peers in the market. Now let's talk about the benefits of investing in BKCH. Firstly, it offers a high level of liquidity, meaning investors can easily buy or sell shares in the fund without significantly impacting its price. Secondly, BKCH provides a level of diversification that is hard to achieve with direct investment in Bitcoin. By spreading investments across a range of digital assets, BKCH helps to mitigate some of the risks associated with the volatile nature of cryptocurrencies. An important aspect to consider when investing in any ETF is its expense ratio. For BKCH, the expense ratio is impressively low. This is significant because a lower expense ratio translates to higher returns for investors. Essentially, the less you pay in expenses, the more of the fund's returns you get to keep. And that's what makes BKCH so attractive. It combines strong performance with a low expense ratio, providing investors with an efficient and effective avenue to gain exposure to the world of digital assets. So, if you're looking for a Bitcoin ETF that offers operational efficiency, diversification benefits, and a low expense ratio, BKCH might just be the perfect fit for you. BKCH's strong performance and low expense ratio make it an attractive option for investors. Last but not least, let's explore GBTC, a popular choice among Bitcoin ETF investors. Grayscale Bitcoin Trust, or GBTC as it's commonly known, is not just another Bitcoin ETF. This trust was one of the early pioneers in providing investors with the opportunity to gain exposure to the price movement of Bitcoin through a traditional investment vehicle, without the challenges of buying, storing, and safekeeping Bitcoin directly. One of the main features of GBTC that sets it apart is its structure. GBTC operates as a trust, which means it holds Bitcoin on its balance sheet and issues shares to investors that represent a proportional interest in the underlying Bitcoin. This structure gives investors the benefit of owning Bitcoin indirectly, while avoiding the complexities and risks of holding digital assets. But what truly cements GBTC's position among the top Bitcoin ETFs is its proven track record. Having been around since 2014, GBTC has weathered the many ups and downs of the Bitcoin market, providing investors with a reliable and consistent investment vehicle. Now, let's talk about the elephant in the room, the expense ratio. GBTC has an expense ratio of 2%. While this might seem high compared to traditional ETFs, it's important to remember that this fee includes the costs of security, storage, and management of the Bitcoin holdings. So yes, while the expense ratio is a factor to consider, it's also a reflection of the value and security that GBTC provides. Investing in GBTC also comes with its own set of advantages. For one, it's accessible to investors through traditional brokerage accounts, which means you don't need a special digital wallet or exchange account to invest. Additionally, GBTC is eligible for tax-advantaged accounts, like IRAs and 401(k)s, which can offer significant tax benefits. In conclusion, GBTC offers a unique blend of accessibility, security, and stability, making it a compelling choice for those looking to invest in Bitcoin ETFs. It's not just about the returns, it's also about the peace of mind that comes from investing in a reliable and proven vehicle. With its proven track record, GBTC has certainly earned its spot among the top Bitcoin ETFs. Now that we've gone through each ETF individually, let's see how they stack up against each other. First off, let's consider the expense ratios. Expense ratios are essentially the cost of owning an ETF. The lower the expense ratio, the better it is for the investor. iBIT has an expense ratio of 0.75%, while BKCH follows closely with an expense ratio of 0.85%. GBTC, on the other hand, has a slightly higher expense ratio of 2%. So in terms of expense ratios, iBIT seems to have a slight edge. Next, let's turn our focus to performance. Over the past year, all three ETFs have shown promising results. iBIT and BKCH have both seen substantial growth with returns of around 20% and 15% respectively. GBTC, however, has outperformed both with a return of approximately 30%. Despite the higher expense ratio, GBTC's strong performance makes it a compelling choice for those seeking higher returns. Lastly, let's talk about features. iBIT offers exposure to a diversified portfolio of cryptocurrencies, not just Bitcoin, providing a more balanced investment. BKCH, on the other hand, focuses solely on Bitcoin, making it a suitable choice for those who want a pure-play Bitcoin ETF. GBTC is unique in that it's structured as a trust, not an ETF, which allows it to hold physical Bitcoin. This feature might be appealing to investors who want direct exposure to Bitcoin. To sum it all up, each ETF has its own unique appeal. iBIT scores with its lower expense ratio and diversified portfolio. BKCH stands out for its focus on Bitcoin, while GBTC shines with its strong performance and unique structure. Each ETF has its strengths, and the best choice depends on your individual investment goals. So think about what you're looking to achieve with your investment and choose the one that aligns best with your objectives. Expense ratios may seem like small numbers, but they can have a big impact on your investments. Let's unpack that a bit, shall we? In the world of Bitcoin ETFs, or any ETF for that matter, expense ratios play a significant role in shaping your overall returns. They are essentially the cost of doing business, what you pay for the privilege of having someone else manage your investment. Now, one might think, well, these are just tiny percentages, right? How much of an impact could they really have? Here's where it gets interesting. You see, these small percentages, when compounded over time, can eat into your returns significantly. Imagine an expense ratio of just 1%. Doesn't sound like much, does it? But over a period of 20 years, a 1% expense ratio could reduce your investment's value by nearly 20%. Yes, you heard that right, 20%. And when we're talking about Bitcoin ETFs, investments that already carry a certain level of risk due to the volatile nature of cryptocurrencies, every penny counts. A lower expense ratio means more of your money is working for you in the market, potentially earning returns. Conversely, a higher expense ratio means more of your money is going towards costs, reducing the amount that could be earning returns. But here's the catch. A lower expense ratio doesn't automatically mean an ETF is a better choice. It's just one of many factors you need to consider when choosing your investments. You also have to take into account the ETF's performance, its management team, the assets it holds, and more. So, when you're evaluating Bitcoin ETFs like iBIT, BKCH, or GBTC, don't just look at the potential returns. Pay close attention to the expense ratios. They might seem like insignificant numbers at first glance, but they can have a profound effect on your investment's bottom line over time. So remember, when it comes to ETFs, it's not just about the returns, it's also about the costs. Bitcoin ETFs have come a long way, but they're just getting started. As we gaze into the crystal ball of financial markets, it becomes clear that Bitcoin ETFs are not a fleeting trend. Instead, they're a game-changing financial instrument that's set to revolutionize the investment landscape. They're a bridge, connecting traditional finance with the innovative world of digital currencies. The future of Bitcoin ETFs is intrinsically tied to the evolution of blockchain technology and the broader acceptance of cryptocurrencies. As these digital assets continue to mature and gain wider adoption, we can expect a corresponding growth in the Bitcoin ETF market. Regulatory bodies worldwide are becoming more open to cryptocurrencies, and this acceptance will likely pave the way for more Bitcoin ETFs. We're also likely to witness increased diversification within Bitcoin ETF offerings. Just as we have ETFs focused on specific sectors, countries, or investment strategies in traditional finance, future Bitcoin ETFs may be tailored to specific crypto sectors or strategies. This could include ETFs dedicated to privacy coins, DeFi tokens, or even specific blockchain technologies. Moreover, the introduction of Bitcoin ETFs in major markets could also lead to increased market liquidity. Institutional investors who were once wary of the risk and complexity of direct cryptocurrency investment may find Bitcoin ETFs a more accessible and safer avenue. This could bring a significant influx of capital into the Bitcoin market, driving up demand and potentially even the price. However, as with any investment, Bitcoin ETFs are not without their risks. The volatile nature of cryptocurrencies means that Bitcoin ETFs could see significant price swings. Future investors will need to be well-informed and prepared for potential market turbulence. As the world of finance continues to evolve, Bitcoin ETFs are poised to play a significant role in its transformation. Bitcoin ETFs represent a fundamental shift in the way we think about investing, merging the realms of traditional finance and digital assets. The future is digital, and Bitcoin ETFs are leading the charge. We've covered a lot of ground today, and we hope you found this information useful. We've explored the fascinating world of Bitcoin ETFs, delving deep into three key players, iBIT, BKCH, and GBTC. Each of these funds has its unique features, advantages, and potential pitfalls. iBIT, a pioneer in the space, is known for its broad exposure and low expense ratio, making it a popular choice for many. BKCH, on the other hand, brings a different approach, focusing on blockchain technology companies, offering an indirect way to invest in the Bitcoin ecosystem. Lastly, we discussed GBTC, a trust that holds Bitcoin and is traded on the stock market, providing a simple and accessible way for investors to gain exposure to Bitcoin. We also emphasized the importance of understanding expense ratios. These are fees charged by the fund for managing your investment, and they can significantly impact your returns over time. Regardless of the fund you choose, it's crucial to be aware of these costs and factor them into your decision-making process. However, as we've stressed throughout this video, it's essential to conduct your own research before making any investment decisions. The world of Bitcoin ETFs is complex and ever-evolving, and what might be a good fit for one investor might not be the best choice for another. Consider your own financial goals, risk tolerance, and investment horizon, and don't hesitate to seek professional advice if needed. As we look towards the future, Bitcoin ETFs are poised to play an increasingly important role in the financial landscape. They offer a way for investors to access the potential of Bitcoin and the broader cryptocurrency market without the need to directly buy, hold, or manage these digital assets. If you've enjoyed this video and found it informative, please subscribe, like, and share. Your support helps us create more content like this. Thanks for watching, and remember, the future of finance is in your hands.